So we survey tax directors across the world on a very regular basis to hear what's top of mind. And European tax directors are juggling a lot of balls today. Now we're in the last quarter of the year, so clearly BEPS must be top of mind. Patrick, I'm just curious, when you talk to French tax directors, what are you talking about?
Well, clearly, BEPS 2 and Pillar 1 and Pillar 2 are effectively in the middle of the conversation. This is September 2021. Everyone is eager to read the revised version of the blueprints on Pillar 1 and Pillar 2 that are expected hopefully next month. And if we start with Pillar 1, although it should concern a limited number of multinationals, companies in France and in other European countries, by the way. Really, Pillar 1 is giving many people a headache in terms of modeling and trying to predict the financial consequences of that allocation of a reasonable share of profit to the market jurisdictions. So the house, that is to say, the access to data and the modeling and the implementation of sustainable and reliable IT systems is potentially a something that clients and our contacts struggle with, but also what is the reactions of the local tax authorities, both in the market jurisdictions but also in their own country. So they predict effectively probably an increase in controversy for in the future. So that's definitely in the conversation. Also, another topic is the relation with the abolition of the digital services tax in the various countries. Will that happen right away, as soon as we have a political agreement, or will we have to wait until the legislation, the actual legislation, to pass into domestic law, potentially via an EU directive? Well, potentially, presumably via an EU directive. So that's also one of the questions. I don't know if that corresponds to Kash's experience in the UK.
Yeah, I mean, I think the interesting points, Patrick. I think the dynamic in the UK is slightly different. I mean, when we started on this journey of taxation of the digital economy, I think everyone thought, well, this is all going to be focused on US tech groups. But I think what's clear is that Pillar 1, where we've ended up, is much broader in scope potentially. So thinking about UK PLC, well, many of the largest UK headquartered groups are in the extractives and financial services sectors, and I think they'd hope to be excluded, subject to nailing down the precise wording of the exclusions. But there are a number of life sciences and consumer groups who are likely to be within scope of Pillar 1. And I think that probably goes for some of the other European jurisdictions as well outside of France. So, groups in those sectors would certainly have found themselves quite surprised to be potentially in scope of Pillar 1 compared to where things were heading a year ago. So really, they're now starting to consider what compliance with Pillar 1 is likely to mean, and what that means from a financial perspective, but also from a resourcing perspective as well for their tax functions. And then I think Pillar 2, clearly much broader application. So groups are starting to think about beyond the level of technical complexity, which I think is still quite mind-boggling in terms of what that will mean, given the interaction of the UK's existing rules around hybrids, CFC, how that all fits together. Also, rules around grouping, joint ventures, etc. So there's a huge amount of technical complexity that's going to be needed to make these rules workable in the UK, and how groups are going to play a part in helping a workable set of rules be developed in a very short period of time. But I think even thinking beyond that, again, groups are thinking about how they're going to gather the information, the data, perform the calculations that are going to be needed to comply with this. So it's a balance at the moment in terms of what groups are thinking about their priorities, planning ahead, how they're going to comply, but also trying to think ahead around what a structure for the UK would look like in terms of legislation.
Well, and Kash, I can only imagine as you talk to UK tax directors, it's almost piling on, right? You have all of this material that you just talked about. And then, of course, you've got a planned tax rate change as well that tax directors have to communicate impact on. So how are they dealing with all of this at once?
That's right, Rodney. So clearly, trying to understand and model the impact of the increase in the headline rate in the UK with the backdrop of a broader change in international tax globally and changes in the US, both technical and probably on the headline rate as well. A lot to try and piece together for groups, but certainly that is what they're focusing on, modeling, understanding and communicating impacts to various stakeholders. A key part of that also for heads of tax is thinking about what this means for them as in terms of resourcing, capability, access to data, and just ability to comply as well.
Interesting. And then, Patrick, I'd have to end with you just on that question with the UK and even the US. So in a lot of countries, as a result of Pillar 2, perhaps rethinking their mainline corporate tax rates. Is there any word on any expected changes in the French landscape today?
No, Rodney, not at this stage. Although, of course, French groups are looking very closely at the impact of a potential US and a UK increase in tax rates because of their presence locally. For the time being, despite all the large public deficit and large spend created or caused by COVID or the reaction to COVID, we haven't heard any rumors about any increase in rates. Noting that next year we'll have presidential and general elections, so of course then the politics can change that. But for the time being, nope, no words of that.
Well, that's a very positive note to end on. One bit of change that might not be occurring amongst a sea of other changes. Kash and Patrick, thank you for your time today.